The OPEC oil-producing countries and their allies have agreed to slash their output over the coming months. At a meeting in Vienna, OPEC Plus, which also includes Russia, decided to reduce production by 2 million barrels per day. The move aims to support oil prices, which have fallen by 30% since June. US President Joe Biden, though, says he's disappointed by the decision, which he's called short-sighted. Well, let's discuss this further with Carol Nachler, who is CEO of Crystal Energy. Thanks a lot for joining us on DW Business. This decision by OPEC Plus is going to come as a blow to countries already struggling with their energy costs, isn't it?
Well, if you're going to look at the number, 2 million barrels a day, literally, that is definitely a blow to a market which has been struggling with high prices. But actually, market observers understand that's not going to be the actual 2 million barrels a day taken out of the market, because OPEC and its allies in OPEC Plus, most of them have been producing below the quota allocated to them. So in reality, the 2 million barrels a day would translate into less than 1 million barrels a day of barrels taken out of the market. I'm not trying to downplay the significance of that amount, but it's not as bad as 2 million barrels a day. But we're seeing already upward pressure on oil prices, which is already bad news to energy consumers around the world.
Yes, Americans are particularly going to see it at their petrol pumps, aren't they? And President Biden has said that he's disappointed by this decision. He's called it short-sighted. Is the US going to have to act in some way in response to this?
Well, definitely, politically speaking, the U.S. is not happy with the decision. I don't want to say the U.S. because the U.S. is also the world's largest oil producer. So in that respect, high oil prices can also benefit the U.S. to a certain extent. But politically speaking, because we are heading towards midterm elections in a month's time, that is not good news, because high oil prices affect the popularity of the current president and his administration. How the U.S. will react, I'm not quite sure. How well can they react in the short term? But one of the possible scenarios is that they will reactivate the non-OPEC bill, which was hugely discussed earlier this year, and which would qualify OPEC as a cartel, and there will be consequences, legal consequences. But beyond that, there will be mainly political developments, which we are unlikely to guess at this stage.
The thing with OPEC Plus is that Russia is at the table along with OPEC. So is there anything that we should read into Russia's involvement here? Because it does stand to gain strategically, doesn't it, from this decision?
Russia is an important player within OPEC Plus, and it's actually even more important for the longevity and the influence of the producers group. And it is the second largest producer after Saudi Arabia. So definitely it has an important influence on the group, which is also showing clear support to Russia. And by putting upward pressure on prices, that by itself is a move to support Russian oil production and Russian economy, just at a time when Western powers are considering to put a price cap on Russian oil exports.
OK, Carol Nachler from Crystal Energy, thank you so much for taking the time to talk to us on DW Business.